Welcome, ladies and gentlemen, to the Board of Commissioners, City of Bowling Green, Kentucky, regular meeting, City Hall, August 19th, 2025, 4:30 p.m. And we're going to begin the night with our invocation, pledge allegiance. I will turn it over to my colleague, Commissioner Carlos Bailey.
I would ask everyone to stand. Just bow your head. First, Father, I want to tell you thank you for everything you have ever done for us in this city. And I want to ask for a blessing for everyone that's in this room, a blessing for every person that's in our city, and also a blessing to all the first responders that's in our city as well. But I will also ask for a blessing to our nation, Lord. And God, with everything you give us, let us always be good stewards of our city and our community. Lord, with every decision, let us always remember to lead with compassion, with your guidance, and with wisdom. Let us always remember that with every ordinance and everything that we do, there's a real life that's impacted by it. I ask for all the blessings that we can, and also to look out for our homeless and our most vulnerable, God. Thank you for everything you've done for us, and continue the blessings that we receive. In Jesus' name, amen. I'd ask everyone to turn to the flag. I pledge allegiance
To the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you, Commissioner Bailey. Thank you, everyone. Mrs. Jackson, will you please provide a roll call?
Commissioner Bailey.
Here.
Commissioner Beasley Brown. Here. Commissioner Hill. Here. Commissioner Perigin. Mayor Alcott.
Here. Ladies and gentlemen, this evening we're going to begin with the public hearing, and I'll also turn it over to the City Commissioner, Jeff Meisel. City Manager, sorry. Thank you.
I'm honored to be called City Commissioner. Just before we get into the public hearing, I want to recognize one recent announcement award. It's from Public Works. We've got a group up at the National American Public Works Association Conference this week. But for the first time in 70 years, the Kentucky APWA chapter has made history by earning the Presidential Acknowledgement of Chapter Excellence Award from the American Public Works Association. First time in 70 years. This was announced at the conference this week. Especially we want to recognize our own Ryan Johnson, Public Works Operations Division Manager, for his work as the APWA Vice President. He's the Vice President of APWA National. And then Derek Sanders, our crew leader at Ops, is also a Vice Chairman of the Southern Branch of Kentucky, APWA. So congratulations to those guys for their award at the American Public Works Association Conference.
Congratulations.
Do you want to knock out a couple more things real quick?
Yes.
Okay. If you're in the audience, want to make public comments, please sign the register in the back corner of the room. We'll take those up after the regular session is over. And then I'd like to bring up Mr. Tim Allen. He's with Soki Patriots Group, and he's got a project he'd like to let everybody know about. Mr. Allen?
Thank you for having me, and I'll try to back away from this thing. I'm pretty loud as it is. Soki Patriots, most of y'all know what Soki Patriots does for the community. We do the backpack program for all Warren County schools, Bowling Green City schools. We do medical mobility equipment with a veteran priority. Last year we did $36,000 worth of equipment back into the community with no charge to anyone. We're a 100% volunteer organization. The only person we do pay is a CPA. So that's very important. I'm here today because I'm bringing this idea of this Veterans Memorial Garden to you. My son was Lance Corporal Keegan Thomas Allen. He was in the United States Marine Corps. He was stationed in Hawaii when a tragic accident happened. They was out riding their motorcycles. There was a collision, and he was run over by another vehicle, and the vehicle left. So it's classified hit and run accident. He was 19 years old. He went in at the age of 17. He was teaching 2 classes at his location and had just been selected and recruited by the Recon Swimmers Group for the Marine Corps. So he was moving. So on the second page, you have kind of an overview of the Memorial Garden we're looking at. There will be a bench for each service branch. In Phase 1, we have the American flag in the center, and then we have a walkway, a circular walkway with a lead-in from a sidewalk or something. Going to the third page introduction, you can read that, and I just discussed some of that. This is a 50 by 50 memorial garden honoring service members who have died serving on active duty. Now, this does not mean that they were killed in combat. This means that they were serving their country, and they died while serving their country. We already have a lot of donations, $2,000 of pavers. We have $1,000 of mulch. We have benches. Someone has donated $500 for the 5 benches. We got a lot of the nurseries locally that's donating $250 with us giving a $250 match to them. So $500 in flowers, which equals $2,000 in flowers that will be put out there. The maintenance plan, we do have a maintenance plan for this. This is not something that we're just going to hand off to somebody and say, here it is, go. This is a maintenance plan. We got a soft maintenance and we got hard maintenance. Soft maintenance will be conducted by the local JROTC programs, the Boy Scouts, Girl Scouts. We got church groups that want to come and be part of this. And we're reaching out to the local FFA organizations to help us with the flowers for continuing on. So you can read all the different things. The main soft maintenance is really easy. The hard maintenance would be done by certified individuals that have the ability to do chemical treatments of grass and things like that, or run equipment. Okay, so there's that page, and all the stuff that we would provide is on the next page, and I'm trying to hurry up as fast as I can. And we do have a maintenance schedule. Our goal was to be able to announce this on Keegan's death date, which is September the 5th, but we currently do not have a location yet. We have sent this information out to a few places. We've only been turned down by Smiths Grove. So we're out looking at Warren County and Bowling Green City. We want this to be placed in a location where it will be highly utilized by our veterans or our patriots and seen as much as possible. It's going to be a beautiful thing. I hate to quote the man up in the president's position, but it'll be a beautiful thing. And we plan on taking care of it for the future. And when I'm no longer able to do it, we want to set the plans in place where it will just continue on. So I think that is, last page is our fundraising. We've got $12,760 in our account. That is the Keegan Cares account. That is not all designated specifically to this program. It's the other things that we do for the community with through Keegan Cares, the JROTC programs and stuff like that in town. So any questions? I'll cut it off there.
Tim, thank you for sharing this dream, and I know Keegan was your son, and I know he has a special place in your heart, and he served his country, and we remember him as well. But thank you very much for your continued service to our veterans and to our community.
Sir.
So originally I mentioned there might be a need for a closed session. There is no need now for a closed session, so we can pass on that one. I'd like to go ahead and call Katie Schaller-Ward up, our Assistant City Manager, CFO, to give you our annual public hearing on our property tax rate. Katie?
Katie?
Good afternoon, everyone. I am here, obviously, to talk about the property tax rate, and we do this every year. This will be probably my last official act as your CFO, or so I hope for the next month, hopefully. All goes well. And so I would like to thank you for the opportunity to present to you this afternoon. We did recently receive the property assessment values from the Property Valuation Administrator for property values as of January 1st, 2025. We have completed the computations and are prepared to present a recommendation for setting the 2025 tax rates for both real estate and personal property. I will spend most of my time talking about real estate, less time talking about personal property. By statute, state law, we are required to hold a public hearing if at any point we look to set a rate that will be above the compensating rate. We did publish this public hearing notice on the city's website in accordance with our statutes, as well as published in the Daily News on August 8th, and it's also been advertised on our social media. The total assessed value as established by the Property Valuation Administrator on real estate in the city limits for 2025 is over $7.9 billion. This is a 7.6% growth rate, or an additional $558.6 million compared to the previous year. The city is required by state statute to pay the PVA, the Property Value Administrator, $100,000 per year. This is up from $60,000 when we passed the $6 billion mark in 2022. Existing real estate assessments grew by 6.3%, or approximately $462.6 million for 2025. The last time the city experienced existing property growth at this level was in 2007, when it was at 6.5%. Since 2007, the average growth rate in existing property has been 2.7%. That's 2008 through 2025. This is the second consecutive year where the existing real estate assessment values exceed 4%. New property assessments in 2025 adds another 1.3%, or $96 million. Since 2007, new property growth has averaged about 2.6%. Every local government is required to provide the computation that would show the compensating rate. This is essentially a no-growth rate. So if we wanted to receive the exact same revenue that we received in 2024, fiscal year 2025 for the 24 assessments, then this would be the rate we would need to look at.
That's item 1, Katie?
Pardon, yes, that is, that's going to be your letter I on the sheet. In 2024, the 20.4 cents could have produced approximately $15 million in potential revenue, and that's identified as the capital letter A on that worksheet. However, the city only collected $14.5 million. That's a difference of over $519,000, or a collection rate of 96.55%. So a collection rate is the amount of potential revenue that is calculated at the proposed rate compared to the actual collections experienced for that year. So we were expecting 15 million, but we received only 14.5 based on the rate established at the 20.4 cents. Now, the other calculation we must do is to show what the 4% growth rate would be. A 4% growth rate is the maximum allowable increase by statute, which is not subject to recall. A rate of 19.9 cents could produce approximately $15.7 million. That's identified as the capital letter C on the worksheet, before any new homestead exemptions or other exonerations are applied during that calendar year. Again, looking at our actual collection rate for fiscal year 2025, which was 96.55%, the revenues produced would likely be closer to $15.1 million, not 15.7. The fiscal year 2026 budget for all funds was set at $15.5 million. If the 4% growth rate of 19.9 cents is utilized, this would cause a potential shortfall in our revenue budget. In FY 2025, when the rate was lowered from the 20.5 cents to the 20.4 cents, which was the maximum 4% for that year, it was projected to have approximately a $60,000 loss. These losses compound over time and they can never be recaptured. I would also like to note that the homestead exemption for the years 2025 and 2026 has gone up 5% from the prior year, so it's at $49,100. This amount is set by the Kentucky Office of Property Valuation each year, or each 2 years, biannually. The proposed tax rate for 2020, at the 20.4 cents, projected revenue would be approximately $15.6 million at a 96.55% collection rate. Again, looking at what we collected in the fiscal year 2026 budget. This closely aligns with the adopted FY26 revenue budget of the $15.5 million. The fiscal year 2025 budget was $14.6 million, and actual collections were $14.5 million. That was about a $100,000 shortfall in our revenue budget, but less than a 1% variance. So we were very close to budget and is acceptable. The compensating rate for 2025 would keep the revenue potential at that same amount, so approximately the $14.5 million. This would be a loss of $900,000 to the city's revenue budget. This budget has already been adopted, and those funds have already been spent across all of the departments to balance the fiscal year 2026 budget. Proportionately, that is, public safety would receive the most of that amount. As you may recall from the budget presentation, the fiscal year 2026 budget figure was projected based on a 5-year total average growth rate of 5.7%, and also took into consideration collection of delinquent property taxes and the first recap received from the Property Valuation Administrator in late April. That first recap reflected a total assessment of $7.7 billion for a total percent increase over the fiscal year 2025 budget of 6.6%. So that is how we put our budget together. The calculations that we conducted in April based on that $7.7 billion assessment value would have shown the 4% growth rate to be the 20.4 cents. In most years, we typically see that the second or the final recap comes in less than the first recap. There is no explanation provided as to why the second recap increased by over $200 million to exceed the $7.9 billion. For the City of Bowling Green's fiscal year 2026 annual operating budget, total taxes represent 20.4% or almost $23.9 million of general fund revenue. Total taxes in the general fund revenue budget are represented by real estate, which is 65% of that amount. Also, the real estate revenue represents 15.4% of total general fund revenues. So of that $23.9 million, 15.4% of that total revenue budget. It also includes not just real estate, but personal property, insurance premiums, bank franchise fees, telecommunications franchise fees. We have the Lover's Lane bond distribution, and we have penalty and interest. All of those items go in to make up the $23.9 million budget that we have in general fund. For the all funds, additionally, we add in the transient room tax and the natural gas franchise fee. Revenue growth is vital for continued sustainability. And I have always told you that all along. We want to maintain continued sustainability. That's our long-term viability, right? So as expenses grow, so must revenues to present that balanced budget. The city has continued to strive to live within its means each year by producing a balanced general fund budget, and has done so while either maintaining or reducing the property tax rate. The revenue reduction over time does affect potential projects that support a growing city. Thus, looking ahead, maintaining the same rate to keep revenues in line with the budget is critical for the long-term success of this community. In addition, no growth in property taxes would cause more reliance on the city's occupational fee, which already accounts for 72.6% of the general fund revenue budget. Now, in front of you, I placed a spreadsheet. It goes back further, I believe to 2008. I could not fit all of that on this slide and still make it legible, so I apologize for that. But this is the 10-year history of real estate property growth and the tax rates for each year that were set by the city. Although not shown in its entirety, as I mentioned, the tax rate remained unchanged from 2008 through 2017, where it remained at the 20.6 cents, until it was slightly lowered in 2018 and again in 2024 when the growth rate exceeded the 4% when existing property values exceeded 4%. The growth is directly tied to the rise in assessment values. 2003 was the last year that real property tax rates were raised. In that year, the city elected to take the full 4% growth rate. However, since 2003, the rate has been lowered 6 times, as the existing real estate growth exceeded 4% in those years. There is no requirement to lower the rate. However, KRS does make it more cumbersome for a community to make that determination. We have to go through a few more hoops to follow that process. And I'll explain that in just a moment. Since the city has generally not taken the full 4% growth rate when it could, it has lost its compounding effect over time. Reducing this rate would cause the city to lose revenues as previously stated and potentially not meet our budget. Thus, the recommendation is to maintain the existing 20.4 cents for 2025. We went through the scenario of what you see on this slide, and it's also toward the middle to bottom part of the spreadsheet I put in front of you. This slide is the history of the potential tax rate, considering the compensating rate and the 4% growth rate compared to the actual rate the city set each year. Through the years, the city has not accepted the full 4% growth rate when the opportunity presented itself. The city opted to maintain a more consistent tax rate and rely on the growth in assessment values to continue growing revenues. By maintaining the same rate for multiple years in a row, the actual rate fell between the compensating and the 4% growth rate. This has provided a minimum of a $22 million savings to the taxpayer since 2009. There is a separate sheet in your packet that identifies that. This has also provided consistency for taxpayers for the years when assessment values remained unchanged. Investors, developers, and individuals relocating for new jobs have also benefited from a constant tax rate. Each year the 4% growth rate was not taken, reduced potential revenues for future years, which cannot be recaptured, as I've mentioned, due to the compounding effect. We went through a scenario, and I want to thank our staff accountant, Zane Martin, and our Assistant Chief Financial Officer, Sean Weeks, for helping to put this together. This is a what-if scenario, so this did not happen, as you know, but had the city taken the full % growth rate each year, started going all the way back to 2009, the tax rate might have climbed to 26.6 cents for 2024 and have produced an additional $30.7 million in revenues over that 16-year period. The city would also be looking at 26 cents for the 2025 rate at a 4% growth rate. So it would appear to go down again because our real estate went up the 4%. But as you set a rate higher, the rate will go higher every time you do the calculation. So that's what you're seeing with that 4% each year line. Also, at the 26 cents, had the city maintained that, and we took the 4% growth rate for 2025, that would produce potential revenue of $19.8 million, again looking at a 96.55% collection rate, which matches what we received in 2025. I didn't want to overestimate. I wanted to be conservative with these figures. More real property tax revenue would have also reduced the reliance on the occupational fees in the general fund by maintaining a more robust 20% of total revenue versus only 15.4% today. It's also important to note that Moody's and Standard & Poor's prefer local governments take a rate which produces strong and consistent revenue growth and ensures long-term sustainability, leaning heavily on property tax rates for their evaluation process. That's important to us when we determine to go out and bond or finance a particular project or item. They want to see that strong growth. As seen on this particular chart, both the Bowling Green's proposed 2025 tax rates for real property and personal property fall below the average 2024 published rates for Kentucky cities, counties, and school districts. The city's personal property tax rate has remained unchanged since 1980, when it was lowered from 30 cents. Again, that is why I'm not really speaking of that particular rate. It has been that rate since 1980. We're not proposing to make any changes to it. This next chart reflects how Bowling Green's 2025 proposed tax rate compares to the 2024 rates set for these other local entities. Their 2025 tax rates are not yet available, so I can't speak to what they're going to move forward with, but the state has announced a reduction to 10.6 cents for real property for 2024. That's down from 10.9 in for 2025, which is down from 2024. Now, as I mentioned, there is no requirement to keep the cap of 4%. It just makes it easier for local governments not to exceed the 4%. However, state statute does outline the particular procedures to be followed if a local government does decide to exceed the 4% growth rate. So I presented those on the slide you see now. So basically, there is a 45-day waiting period after adoption of an ordinance setting the rate. We would have to publish that notice in the paper within 7 days of the adoption. A petition could be filed in the Warren County Clerk with Warren County Clerk opposing the rate, requiring a 10% total number of votes, requiring the number of signatories on that petition to meet a 10% of the total number of votes cast in the last preceding presidential election. For Bowling Green, that would be approximately 2,312 signatures. If the petition failed, the ordinance is if a petition is filed, the ordinance is suspended from going into effect until the next general election. However, if a petition is filed, you have the opportunity to reassess your tax ordinance and amend it at that particular point in time. So you're not stuck with the rate you move forward with tonight. The city collects property taxes for the Bowling Green Independent School District. If the Bowling Green Independent School District adopts a rate which also exceeds the standard 4% growth rate, both entities would follow the same implementation schedule. If you recall last year, we reduced our rate from 20.5 to the 20.4 cents, so we stayed at the 4% growth rate. However, the city schools implemented rate higher than the 4% growth rate, so we still had to wait their 45 to 50-day waiting period for them to get through the process to make sure there was not a petition filed. Then we could proceed with putting our tax bills out. At this point, we could be on the same implementation schedule if they do as we're suggesting with our rate. So as I wrap up this public hearing, persons that own property in the city will pay taxes to both the city and to Warren County. City invoices, as I've mentioned, will include the Bowling Green Independent School District taxes due for those who own property within that district. It is a very small district of all of the city of limits. The city does not set the tax rate for the city schools. We only collect on their behalf. City taxes will be due December 31st, 2025. That is a Wednesday this year. Payments can be made in person, by mail. They can be submitted online on our website. We also have a drop box outside of the City Hall Annex. They can drop that by at any point in the day or on a weekend, and we collect it the next morning. Tax invoices would be similar in format as in past years. It's a single sheet, 8.5 by 11, with a tear-off remittance slip at the bottom. We estimate mailing out over 23,300 of these invoices, with probably close to 1,000 being returned for wrong addresses. Treasury staff will attempt to locate the correct address for those particular returned envelopes, but we do encourage individuals who have changed their property addresses to let us know that, particularly if it's happened since January 1st of this year, to let us know that so we can get that updated in our system, and then also to let the PVA know that so they can update it permanently in the file. Persons with mortgage escrow accounts set up to pay their taxes will still receive the city tax invoice. Information may also be sent to the mortgage company by request. However, it is still the property owner's responsibility to make sure that payment is made by the deadline. If a property owner has not received a tax invoice by November 15th, we suggest that they contact our office so we can verify that. We expect to have tax invoices mailed out in late October. Even if a tax invoice is not received, the property owner is still required to pay the amount owed by the deadline. Property owners are not excused of their responsibility, so it's important that they do follow up. I would like to again thank Staff Accountant Zane Martin and our Assistant Chief Financial Officer Sean Weeks, who assisted with the calculations and gathering the historical data. I would also like to thank in advance our City Information Technology staff as well as our Treasury staff for all of their efforts with processing the 23,300 plus invoices that will have to be mailed out, and assisting the property owners with any questions and their payments that they make. This is a public hearing, so anyone who would like to make comments or ask questions can come forward to the podium. We will also be taking questions and comments via address, email, fax, however they want to submit that. The information there on the slide is how they need to submit that. And we'll be taking those until August 25th. So this isn't the only opportunity for someone to step forward. And at this point, I would like to ask, is there anyone in the audience that would like to come forward? Okay. Do you all have any questions? Sorry, I don't mean you all, but.
When to when? Explain that.
From the recap we received, the first recap we received at the end of April, that was about a $7.7 billion assessed value. When we received the second and final recap this August, that's where it went up to the $7.9 billion. And we don't really have any explanation as to why that increase occurred. As I mentioned, we went back to 2019, and from 2019 to 2023, the second recap traditionally went down, not up. Not by a lot, but still it went down.
Charlotte Ward, a lot of people, I'm going to make it very, very simple. A lot of people are like, well, you know, my property taxes are going up. And I know probably all five of us say, we didn't raise any taxes. Can you explain to the public how that went up?
The tax rate itself is what you set. You're not, at this point, I am not proposing or recommending anything but keeping the same tax rate. Now, you can make a determination to change that as you will, but there is no proposal to increase the tax rate. What ultimately happens when an individual sees the cost of their property taxes going up on that invoice is because of the assessment value went up. The tax rate is then applied to the new assessment value. That's where they see the increase. So it isn't necessarily based on the tax rate, it's based on the assessment values.
You might have covered this, if so, I apologize. Do we know how many properties, how the percentage of property that were increased in our society this time?
I'm going to let the city manager respond to
Okay.
that.
So I did a little research on that because of the spike in existing property growth. If you look at this big chart that Katie provided, you look all the way back to 2008. We've you know, it's pretty steady, 4.1, 1.1, 0.6, 0.5, 1.5, 0.7, 3.3, 1.7, 2015, 2.8, 2.9. 2018 was a little bit of a spike, 4.5. That's when we lowered it. 2019, 1.9, 1.8, 3.2 in 21. That was after, well, that was, anyway. Then it looks like 3.7 in 22, 2.7 in 23, 4.8 last year when we lowered it to 20.4, and then you get to 2025 and it's 6.3. From my research, I think during this past year, 33,000 out of roughly 54,700 properties were reassessed. That's 60.3% in 1 year.
All increased in value.
All increased, leading to that 6.3% growth in existing, which is kind of an anomaly when you look at the history of the growth in existing property. KRS 132.690 kind of gives you the parameters of when stuff gets assessed. It's kind of says no less than once every 4 years. But when you do 60% 1 year, that really messes with your calculations. So 33,000 out of 54,700 something properties.
Once again, we did not do that, correct?
No, we did not. We're not responsible for property assessment.
Okay, thank
So
you.
typically, in a year of PVA, they have no less than every 4 years.
I'd say, you know, if it's one every 4 or 5 years, you're looking at 25% of properties out there get reassessed, but this was 60% 1 year. That's over double the normal. So that's a very abnormal figure.
Ma'am, I'm going to save the rest of my comments until this item comes before for a vote.
Understand. Well, we have the public hearings because it's not simple to understand. There's a lot of tax rates that are being assessed. The city is one piece of it. Schools are another piece of it. The county is another piece of it. We have 2 school systems that assess differently. Each board makes a different decision, but we all work together. You know, we're a collaborative community. You know, growth comes responsibility. But we'll talk about this as the item comes up. But we understand that we're not here to hurt the community. We're here to grow the community the right size and the right way. But we can definitely appreciate the work that you've put into this, Katie, you and your team. Appreciate the work that happens every year on collecting. But I would like to say congratulations to you as you move on to your next role. As people understand, you're going to become our deputy city manager, assistant city manager. Congratulations on that, and we're proud of you and proud of your work as our chief financial officer. Done a great job.
Any other questions regarding the public hearing?
I just have a follow-up question to the 60% being assessed as opposed to 20, 25, 30%. What does that do moving forward? How is that going to affect us next year and the next year? Have we thought about that?
Well, I would say if you don't do anything next year, then your existing property growth goes way back down, which again messes with your calculation, which then leads you to say, well, I got to increase my rate to get it back to a 4% level. So that's why we've tried to stay just even keel, steady, 20.5, 20.4, just rely on the natural growth that we get from new property, any sales that happen with existing property, and we've always made it fine that way and averaged, you know, the 4, 5, 6% total growth in property tax. So, but there's that calculation that has to be done, and so whether you're above or below 4%, I'd rather not do this with the rates when we have a nice steady rate within a couple points. It's reliable. People know what to expect, When you come here to buy a new home or invest in a business from somewhere else, you kind of can look up, well, that rate runs about the same every year, and I can kind of, rely on that for my budget, personal budget or a business budget. And so that's how we've always done our business. But this is kind of an anomaly that's popped up this year, and this not only affects us, but it affects the county, it affects city schools, and it affects the Warren County schools. So
I do want to clarify too, Commissioner Perigin, that the statute requires all of the properties to be assessed once every 4 years. That doesn't say that they can't be reassessed more. So you could continue to see the same homes reassessed, or they may go and do the other ones, but it's not just assessment once every 4 years. It's a minimum.
I understand that.
Okay.
It's just typically not been done.
Sorry, I have a follow-up question. So, looking at our chart here, we have lowered our property tax rate from 26 cents to 25 cents in 2018. And then again, last year, we lowered our property tax rate to 24 cents. And I think it's just sometimes confusing about whose job is what. The only thing we can control as a city government is the tax rate. We are not in charge of reassessing values of homes. And so could you just explain again to who, like, is the PVA a function of the county government, the city government, or who does the PVA work for? How is that?
PVA is an elected office. It is a state office. It is not a county office or a city office. So it is, they report to the state, not to our local governments. So they set the assessment values. There is an appeals process available. I personally have never gone through it, so I don't know what that's like. But there is a process to appeal your assessed value increase. I don't know how successful that process is, but it is the city's responsibility to set the rate to which that assessed value is then provided a tax amount. Does that make sense?
Yes, I just wanted to
Okay,
clarify
yes.
that we, the only thing we can control is the tax rate, and that is a separate office that is outside of the cities.
Correct, yes, yes.
Stella Ward, thank you for explaining this. I guess this is a question for you and the city manager as well, deputy city manager as well. You talked about the 15.5 million, and you talked about we need to keep it at the point, the 20.4. How would a deviation, even if it was a slight deviation, I know that the city manager kind of touched on it, because we budgeted the 15.5 prior to us knowing this was going to happen. How would even a minor deviation for 1 year impact our city?
So let me just go back, if you will, to that slide. Give me just a second to show you. Again, the compensating rate would bring in approximately 14.6 million. That's at our collection rate. Then the 4% would bring in 15.1 million. The 2025 rate at the 20.4 cents could bring in 15.6 million. Our budget is 15.5. So if you're suggesting the opportunity where we could reduce the rate, 20.3 cents would bring us right in at the 15.5.
the compensating rate is a no-growth rate. Why would anyone turn down growth, natural growth? No business is going to do that. I mean, who's going to turn down a raise? I mean, and we're not raising the tax rate. It's just natural growth in our property. That's Bowling Green. We grow. Our property values grow here in Bowling Green. May not be that way in other cities and towns, but the compensating tax rate is taking you back down to last year's revenue collections. That's no growth.
City Manager, would you mind explaining sort of, because we're growing, what does that mean in terms of the pressures on our city departments? Just some examples of when we grow, how does that impact our ability to serve our citizens?
Property tax, along with occupational tax, is how we provide services. It pays for our police department, our fire department, our public works, our parks, all of our city operations. Our general fund budget, $116.9 million, is reliant on mostly 72% occupational tax and roughly 19 or 20% property tax. That's 90% of our general fund budget, these two revenue sources. It's critical. We've got to keep it growing. We can't go backwards. We got to go forwards.
So what, if we, you know, if our revenue didn't grow, but our city is growing, what could that look like for citizens in
Then
terms
we're
of the
cutting-
ci-
then
the
we're-
city, the services we rely on?
Then we're cutting services. We're cutting services and we're cutting capital investment back into the community.
Mr. Mizell, I appreciate you talking about that because that's exactly what I was talking about, the impact.
That's the
We're
impact.
not really talking about the growth, which we appreciate the growth, but it's the impact. It's the impact to the city services, the impact to the police that we have. It's the impact to basically the fire service, the impact to the streets and the infrastructure that we have. That's what my question was mainly going to. And I think that you're touching on it because if we hurt the budget that we already pre-planned, now the impact that we're trying to help out the city is going to be cut back. That's what I was talking about. It's the impact.
You look at our history here of our rates, and we're the fastest growing city in the state. We must be doing something right. That's all I got to say. I think the facts and the numbers speak for themselves.
When I think about, you know, how fast we're growing and the need for us, like you said, is we have to make sure that we're, you know, being responsible with, you know, the responsibility that we have on our shoulders to take care of this city as we grow. And, you know, I just think about, you know, that worst moment that someone could have when someone you love, maybe their heart has stopped. And I think about that, you know, as I'm trying to go to sleep with my city commissioner hat on, what is my responsibility to take care of the city? It's not, our choices are not always the easy ones, but what is my responsibility as a city commissioner in these moments? And if I think about as we grow and as we have more people that we need to respond to emergencies and you know, crimes that are happening in the moment, if it were to happen to one of our citizens and the emergency responder, because we haven't been able to hire and grow our police department and our fire department as our city has grown, and we don't have the personnel to respond, I mean, that is a pretty real just consequence of us not making these hard decisions. And I'm just thankful for you all always just taking the time to just really explain this complicated scenarios and you know, it's not an easy decision, but just grateful for you all to help kind of lay it out for all of us and our citizens about, you know, what we can control, which is the tax rate and kind of the choice that we have in front of us in terms of making sure that we're making, you know, responsible decisions that continues to make sure that for future generations, and with a steady rate, keeping it the same, that we are making sure that we are setting up future generations to have the type of city services that can keep our community safe and provide the incredible, you know, quality of life that we have. So thank you all.
And let me say one more thing, and just to recap. As we've told you before, with our occupational tax rate, we were at 1.85%, and we came to you all a couple years ago and said we feel like we need to go back to what we had back in 2003 through 2007, 2%. You all approved that. But through that period of time, we basically gave back to the taxpayers $55 million just in that period of time. Same thing happened, as Katie just mentioned, with property tax. By not taking the 4% every year that we could have, and we didn't, thanks to you all and your predecessors, we gave $22 million back to the taxpayers. So that's $80 million since 2008 that we have lived within our means and given that back, allowed the taxpayers to keep that in their pockets. So I don't think anybody can accuse us of being greedy or taking more than we need to take. We've tried to right size and take the appropriate amount and live within our means. So that's all that got to be taken into consideration here.
I think you could bring this down to the household level where the average citizen, this is a lot of number crunching. Everybody isn't a number cruncher. But I know in my household, if I don't bring in a little bit more money every year, then I've got to give something up because I live within my means. And so either that or you're just in debt forever, and that's not a great way to live either. So we try to stay out of debt, we try to not add new debt, and we try to move forward. Everything costs more. Next year it's going to cost more, and the next year it's going to cost more. And if your income doesn't go up, then you're going to have to look at where you're going to cut. What things in your household are you going to be able to live without just to make things even? So it's just to bring it down to the household level. We have to continue to move forward and continue to bring in extra revenue, more revenue than we did the previous year because cost of living increases. What's the cost of living increase this year?
What we did in December, it was 2.9%. I have not looked recently to see, but I believe it's at 3% or above currently.
Right.
Yeah.
So we're just maintaining honestly and maybe a little extra to do a little bit more, but it's not a lot. So thank you very much for all your work, your team's work, the city manager and his office, our attorney, and everybody that really understands what it takes to get a great city like ours constantly moving ahead.
The next step would be to present an ordinance, and there is one on the agenda at the end. You need 2 readings of that ordinance for it to take effect. And then, obviously, if there are no other comments or questions, then I will close this public hearing.
All right.
And the reason I went ahead and put the first reading on tonight is if we didn't, we would be putting it first reading of September, which delays the 45-day period with an appeal, and it aligns us with city schools, so.
Correct. So our 45-day would fall somewhere around October 23rd when we consider also the city school systems and when they make their decision, which again allows us to still get the bills out, hopefully in the latter part, late October, early November. Okay.
Great.
Thank you.
Public hearing. Moving on to our next item. Next item is regular meeting, August 5th, 2025, approval of our minutes.
So moved. Second.
Moved by Commissioner Perigin, second by Commissioner Hill. Comments, questions? None at this time. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Municipal order number 2025-193.
Municipal order approving the promotion of Aaron Ballou to the position of Chief Financial Officer in the Finance Department.
Moved.
Second.
Moved by Commissioner Beasley Brown, second by Commissioner Hill. Mr. Mizel.
I am very excited to recommend to you the promotion of Assistant Chief Financial Officer Aaron Ballou tonight for the position of Chief Financial Officer for the City of Bowling Green. We are choosing to make this effective September 15th, but we would like to get your approval tonight. Just a little bit about this process. I decided against doing a long search process when I had someone right in front of me that was capable of doing this job. Aaron has been in the process of succession planning for a long time. I've known Aaron now for 23 years, since 2002 when she came. But it was understood, determined that there were no other internal applicants that would overcome or surpass Aaron's combination of education and experience. There was one other internal candidate that would have been considered, but chose not to apply for the position, and that's totally fine. But Aaron is responsible currently for accounting, accounts payable, payroll, financial reporting. You've seen her in action many times with the budget. She started out 2002 as an intern, went on to be various different positions in finance, up to chief accountant, senior staff accountant before that, was in payroll for a while, was in purchasing and AP for a while. 2015, she became assistant CFO after a reorganization that I was a part of when I was in finance. And Aaron holds a CPFO, a Certified Public Finance Officer certification through GFOA. She's also a Certified Management Accountant, or CMA. She holds a bachelor's degree in finance. She has her MBA from WKU. Very active in Kentucky Government Finance Officers Association. Really resurrected that program. Really went dry there for a long time, and she brought it back to life. But Aaron is super talented and super involved in GFOA, She even used to review other people's financial statements, CAFRs for GFOA, the popular annual financial report. She should get credit for bringing that to us and starting that program up for us. She's been published a couple of times, so she's done a little bit of everything. So I can't say enough good things about Erin's qualifications. I feel like she's ready for this position. She's been groomed, coached, been a part of so many things, and has a great team behind her. Another great assistant CFO, Sean Weeks, behind her, and the rest of the finance department. She's going to make a great addition to our senior management team. So I'd like to recommend to you Erin Ballou for the Chief Financial Officer position, and wholeheartedly recommend approval.
Thank you,
Erin
Mr.
would like to
Mizel.
say a few words, by the way,
Let's bring on-
after the vote, after it's official, so.
All right, well, let's have Erin stand up a second. Hello, Erin. Wave to everybody. And Erin, congratulations on this recommendation. And who do you have with you tonight? All right, Brian, congratulations to you and your family, commissioners.
I want to say one thing, if I could, Mayor. What we're witnessing here, excuse me, I had to take a cough drop, is leadership. It's how really good organizations run. Same with Mr. Mizel over here, that was one of 3 qualified candidates when the city manager position came open. And now we have 2 qualified candidates within our finance department to be able to take the mantle and run, and there will be probably no hiccup, nothing. You'll run just the same way as, sorry, Katie, but you did a great job. But what you did do is succession planning. You plan for the future, and I'm positive that Erin will be doing the same thing. And I just want to say thank you for our senior leadership team that recognizes that hiring from within is a great thing. When you have to look outside, it probably, you're missing somebody on your team that could have been, worked with and, as you say, groomed and brought along to be able to step into these roles. So thank you all very much.
I'd also just like to echo those comments and just say I've seen Erin in the community. She works with United Way and helping nonprofits, get funds they need to take care of our community, and just seeing her passion. I mean, right after this public hearing about numbers and my, brain is mush, she gets excited and giddy talking about numbers. Like she comes alive, and we need people like that who, this all, makes them come alive and to take care of our city's finances and making sure we're being good stewards. And I'm just so grateful that we have someone like you who is brilliant, but also caring and loves this community and shows up just in, all the hidden spaces, but also in this big way. And I'm excited to get to see you more often in our meetings, presenting what we do, and just grateful to have you on the team, and to see you elevated to CFO is great news for our whole city.
Congratulations, Erin, but I also want to say congratulations to the other candidate that it could have been but chose not to be. I know they are worthy also, and I thank them for everything they do for this city and that they will continue to do for the city. So I thank them as well, and congratulations to them for being a leader.
Erin, I want to tell you congratulations too. I'm reading this and I didn't know this about you. And one thing that I've always learned, to be a great leader is to be a great servant. And sometimes to have a servant's heart is what basically will move forward in life for every single thing. So I know you're going to do great. I always love listening to Katie. I'm going to love listening to you. And I've learned so much just listening to her. So congratulations. I can't wait till you get up here so I can learn from you.
All right, with that being said, roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes, congratulations, Katie Ballou. Katie, would you like to make a few comments?
Good afternoon. Thank you. I promise to be really short. I timed myself. It's about a minute, so I'll be brief. Firstly, thank you, Jeff, for the kind words. I appreciate that. I'm honored and grateful tonight for this opportunity to serve as the CFO for the City of Bowling Green. Thank you. As Jeff mentioned, I spent my professional career with the city, working from a part-time position through college to the position I've been in for the past 10 years as the Assistant CFO over accounting. Over those years, I've benefited from the knowledge and support from my colleagues. The most recent years from Katie and Sean in the finance department, and so many others, our entire finance department, and so many other folks across the city. Their guidance and collaboration has been invaluable, and I want to thank them. I'm honored by the trust you've placed in me, and I'm excited for the journey that lies ahead. The finance department is filled with a terrific and talented group of folks, and I very much look forward to all the great things that we can do for the city of Bowling Green together. Thank you.
Thank you, Kate. Congratulations. Aaron. Sorry. Wow. All right, moving on. Municipal order number 2025-194.
Municipal order approving the probationary appointment of Eric Druin to the position of Construction Coordinator 1 in the Public Works Department.
So moved.
Moved by Commissioner Carlos Bailey, second by Commissioner Beasley Brown. Mr. Mizel.
I'll ask Lori Gray, our HR manager for Public Works, to come up and make this recommendation. Lori?
Good evening, thank you. I'm here to recommend Eric Druin to be appointed to the position of Construction Coordinator 1 in our Planning and Design Division of the Public Works Department. He is here with us, if you want to stand. So the department received 47 applications for this position. We interviewed 8 candidates. And out of those candidates, we selected Eric. He's being recommended for this Construction Coordinator 1 position this evening. He received a Bachelor's of Science degree in Geography from Western Kentucky University and is currently pursuing a Master's degree in Human Development and Leadership from Murray State University. His most recent employment was Development Specialist at City County Planning Commission. Please let me know if you have any questions.
Thank you very much, Lori. Eric, hello. How are you? Did you bring anybody with you tonight?
I sure did. I brought my wife Molly and our 3 beautiful children, Nora, Abe, and Amelia.
Very nice to meet you, Eric. All right, commissioners? All right. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes, congratulations, Eric. Municipal order number 2025-195.
Municipal order approving the probationary appointment of William Garth Bragg to the position of Carpenter in the Parks and Recreation Department.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Hill. Mr. Mizel.
Tiara Britt, our HR manager for Parks, has this one to make recommendation on. Tiara?
Good evening, Commissioners, Mayor. We would like to make the recommendation for appointment for Mr. William Garth Bragg for the carpenter position. This position will be responsible for planning, leading small electrical, plumbing repairs, a wide variety of items, and he will be working alongside our senior carpenter in the Parks Maintenance Department. We had 13 applications received total, interviewed 9 because we had some really great candidates. And it's William Garth Bragg. He goes by Garth. He's here this evening, if he would please stand. So William is a graduate of Metcalfe County High School. He grew up on his family's dairy farm where he learned a lot of his carpentry skills. Following graduation, he enlisted in the military, achieving rank of sergeant. And then he moved on to, after his military service, he worked with G.K. Brown Construction, as well as pursuing a small career in law enforcement with the Glasgow and the Scottsville Police Department. So we are really ready to get him started next week, and let me know if you have questions.
Thank you, Tiara. Garth, hello. How are you doing? We're doing great. It's good to see you tonight. Looking very nice. Well, can you have family at home you'd like to say hello to?
They're all camping. I had to leave the campsite to come up here, but it's a pleasure. I'll do it anytime. So.
Oh, welcome to the city.
Thank you, sir.
All right, commissioners.
It's tough to put a suit on at a campsite.
Mrs. Jackson, roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes, congratulations, Garth. Municipal order number 2025-196.
Municipal order approving the probationary appointment of Edward Campbell to the position of Parks Facility Maintainer 1 in the Parks and Recreation Department.
So moved.
Second.
Moved by Commissioner Beasley Brown, second by Commissioner Bailey. Mr. Mizel.
This is another appointment in the Parks Department. I'd like to ask Tiara Britt to come back up, our HR manager for Parks. Tiara?
All right, so my next appointment this evening is for Mr. Edward Campbell. He goes by Ed. He is here with us this evening, if he's already standing.
It was already said, stand it up.
He's ready to go, y'all. This position is going to be responsible for maintaining shrubs, trees, landscaping, as well as helping with funeral services. We ended up having 64 applications. Initially, we had about a handful that, we really looked at, so we interviewed 4 of those candidates. And Mr. Ed is a graduate of Hopkinsville High School. He gained a lot of his relevant experience working at Cardwell Exteriors as well as USG. He worked as an installer and a cupola operator, if I'm saying that correctly. A lot of heavy equipment, but we're ready to get him started as well, so be happy to answer any questions.
Thank you, Tara. Hello, Edward. How are you doing tonight? I'm good. You have anyone with you or supporting you? Hey, Steve. All right, well, we're going to make this official, if that's all right. Roll call, please.
Bailey?
Yes.
Beasley Brown? Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes, congratulations, Edward. Municipal order number 2025-197.
Municipal order approving a contract for the purchase of 2 fire apparatus in an amount not to exceed $2,432,174 with Atlantic Emergency Solutions, Inc. through the cooperative purchasing contract with Houston Galveston Area Council, and further expressing the desire and intent to finance costs related to the purchase. So moved.
Moved by Commissioner Perigin, second by Commissioner Beasley Brown. Mr. Mizel.
We are in need of replacing some fire apparatuses at Station 3, which is Nashville Road Station, in Station 4, the Morgantown Road Station. As you know, it takes about 3 years to get these jokers put together and delivered. And so we're here tonight to get this ball rolling on these 2 apparatuses. We're looking at roughly $2.4 million for both of them, about $1.2 million each. These will be financed, and part of this municipal order is our intent to finance. We go out and do usually a 10-year financing on these trucks, but recommending the Houston Galveston Area Council cooperative purchasing agreement to use on this one. To get the Pierce brand truck through Atlantic Emergency Solutions. Deputy Chief Doug Morris is here with us on the back row and can answer any of your questions you have on these 2 trucks. But we need to get the order placed and get them ordered.
Great. Thank you, Mr. Mizel.
And there's a long list of specs if you want to read through those if you get sleepy tonight, so that's in your packets.
Chief Morris, see you back there. Thank you for being here. Commissioners, questions? All right. Roll call, please.
Bailey?
Yes.
Beasley Brown? Hill?
Yes.
Perigin? Alcott?
Yes. Municipal order number 2025-198.
Municipal order authorizing and accepting software subscription services from Tyler Technologies, Inc. in an amount of $152,039.02 for fiscal year 2026.
So moved.
Okay.
Moved by Commissioner Bailey, second by Commissioner Hill. Mr. Mizel.
Tyler Technologies is the maker, owner of New World ERP, the system that we use heavily here for a lot of different departments, finance mainly, HR, NCS, all the citizen-facing eSuite modules that we have. Provides for us asset management, benefits administration, code compliance, grant management, personnel, e-payments, project accounting, even mobile inspections, payroll permitting, position budgeting, lots of things. Annual cost for this maintenance, which covers a lot of things, phone support, troubleshooting, software upgrades, enhancements, training, any modifications that we need. We are looking at $152,039 for the fiscal year 26 price. I'd like to thank Danita Weeks, our IT director, for working on this, getting it together and getting that good renewal price at the $152. And she's here, can answer any of your questions you might have. But this is used by roughly 60 or so employees in our non-public safety departments. I recommend your approval.
Thank you, Mr. Mizel. Danita, thank you for being here tonight. Commissioners, questions? Okay, none. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Municipal order number 2025-199.
Municipal order approving the purchase of multiple pieces of golf turf and maintenance equipment with Kenny Machinery Corporation for the Parks and Recreation Department in the total amount of $136,475.08. The cooperative purchase under Kentucky state pricing contract.
Moved by Commissioner Perigin, second by Commissioner Hill. Mr. Mizel.
As you all know, we are equipment and reliant in our parks and public works, but this is for our parks department. Part of the FY26 budget included these capital items. There's 18 total pieces, but tonight we're looking at 6 pieces of Toro equipment that we use mainly on our golf courses. Good memo here written by Mike Mitchum and Brent Belcher. Toro Groundmaster replaces 2022 Toro. At Crosswinds, we're going to move the one at Crosswinds to Paul Walker, kind of push that down. Then we got a Workman, a 2011 Workman we're going to replace, sell the old one, sell that one at surplus. Sand Pro, replacing that one. That's a 2011 model. A lot of hours on that one as well. That will go into surplus. And then we've got a debris blower, and that's become almost inoperable, needs to be junked, and we'll dispose of that one. But total price on these 6 pieces, $136,475. Brent Belcher is here, can answer any of your questions on these. All will be on the state master agreement contract on there, so we don't have to really bid it out. It's already out there, ready to go from Kenny Corporation.
Great. Thank you, Mr. Mizel. Brent, thank you for being here tonight. Commissioners, questions?
I have to say, Brent, my husband golfs at Crosswinds at least once a week, sometimes twice. Today was one of those days, I can't believe it, at 98 degrees, but he brags on how well that municipal golf course is maintained. So thank you very much. Okay.
All right, no further questions or comments. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Municipal order approving, municipal order number 2025-200. Took it away there, Ashley.
Municipal order approving the purchase of a knuckle boom for the Public Works Department Operations Division in the amount of $231,862.83 with Best Equipment Company, Inc. through Sourcewell Cooperative Purchasing Contract.
Second.
Moved by Commissioner Hill, second by Commissioner Perigin. Mr. Mizel.
Trivia, can anyone tell me what a knuckle boom does?
Yes, because I
know
Googled
these
it.
Can I call
Knuckle
a friend?
boom is that nice, handy piece of equipment after a storm that can just reach over and grab a big old pile of trees and debris and throw it in the truck. So we need one, and this was in our FY26 budget as well. I'd like to thank Denise Gillen and Matt Powell for being here tonight. They're here to answer any questions, but we did find this one out on Sourcewell, our purchasing agreement, cooperative purchasing agreement that we have in place, and we're looking at $231,862 for this knuckle boom from Best Equipment Company that would be used by our operations guys during and after storm events and everything that they're out there cleaning up in our 42 square miles on a regular basis. And Denise can answer any of your questions on this purchase, as well as Matt. Recommend your approval.
Good knuckle boom, Denise? Is this the right knuckle boom? Well, thank you for being here
It's the
tonight.
right one. Just say yes. No.
Good to see you, Denise.
This will make 3 or 2? 3, good.
Important pieces to have when you need them. All right. Questions, comments? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Municipal Order Number 2025-201.
Municipal order authorizing a change order to the contract with Scott and Ritter, Inc. for demolition and sinkhole repair services in the amount of $200,000 for a total project cost of $430,000.
So moved.
Second.
Moved by Commissioner Beasley Brown, second by Commissioner Bailey. Mr. Mizel.
As you all know, we have purchased some property since the flooding in April to do some mitigation and to develop more capacity for our stormwater. And some of these properties that we purchased will need to be demolished, and we're in need of increasing our demolition contract and budget for that. Before you tonight is a change order for up to $200,000 for our code compliance division to use for demo mostly on these properties that we've recently purchased, including there's two tonight that you'll see here in just a minute. But Matt Powell is here, can answer any of your questions on this, but recommend your approval of this change order with Scott and Ritter.
Matt, thank you for your work. You've gone above and beyond, you and your team, assessing the value of properties, as well as acquiring now 5 properties from the last flood. Is that correct? That's right. All right. But it's helping out our community at large with retention basins. And these will be properties that will be further damaged by floods if we don't take them down. Although they may look like viable housing, they're not viable housing. They're insufficient housing. All right. Just want to say thank you, Matt. Commissioners?
And I want to echo that. You know, you got in here, basically, you guys are just trying to reduce the flooding impacts. We see it all the time. We know it's going to get a little bit worse, but just to mitigate that and make it a little bit better, I know a lot of those neighbors that live there probably have a little bit of sigh of relief. And so thank you for everything that you guys are doing.
To do it. All right. No further questions, comments? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Municipal Order Number 2025-202.
Municipal order approving the purchases of properties at 1039 and 1041 Fair Street and authorizing the mayor and other authorized city officials to execute real estate sales and purchase agreements, deeds, and all other necessary documents.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Bailey. Mr. Mizel.
I'm going to hand this item over to Matt Powell. This is part of our target list after our flooding incident in April. Matt, you want to explain this one?
Absolutely. So if you'll think back to that original list, you'll refer to the memo. You'll see all the properties that we've been working our way through. We've been working with the Fair Street neighbors for quite a while to try to find a solution for those folks. And we were already working toward one before the unfortunate events in April. And the summary statement there is we were not going to be able to accomplish in the space available a solution that would be protective of these homes. So some combination of the homes needed to come into city ownership so that they could be demolished, and then that space could be rededicated to stormwater storage. Ultimately, we've reached an agreement with the 2 homeowners listed for those prices. And the item before you is within the budget that we discussed in the very beginning to acquire these 2 homes, which will enable us to provide the stormwater storage that will be protective of the remaining homes on that street.
This takes us to what number total?
7.
7. All right.
There's still, the list is never ending, but there's still a couple of targets left, but funds are running thin.
Thank you, Matt. Questions?
These are the main culprits of the.
They are. We've ranked them in order of priority. Several factors go into that. How badly were they damaged? How often have they been damaged? And to what extent can we use the property to be protective of the remaining homes?
I think that's where it's really critical.
Absolutely.
These 2 properties were in our top 10.
Yes. Yes.
I just want to brag on Matt a little bit. When we had those really strong storms and we had the rivers that were rising, and it was scary. And so I was worried about our community, and I texted, I hate to miss it, I texted Matt at 10 p.m. on a Friday night, and because I knew if anyone knew, if everyone was okay, it would be him. And he was at these 2 properties bailing water out to make sure that they were okay. And I just think that just really speaks to the professionalism and the care and dedication of our employees, and just you, Matt, how much you care about our community, that you are going to be there, make sure our community is safe. And not only are you there kind of in the moment, but also thinking through, what are the ways that we can make sure that these families can have a home where they can, relocate to that will keep them safe, and then also make sure the other homeowners in that block are also safe in our next storm. So just thank you for just being so dedicated. And even if it's not during work hours, you're taking care of our community at all times. And I just really appreciate you.
Thank you very much for that notice, but I can't let that compliment come to me and claim all the credit. Nick Lawhon, my geologist, and Brad Shagorodsky, the head of Code Compliance Division, went and got that pump. You guys approved the purchase of that pump back in 2016 for use at the landfill, and we were repurposing it to help protect these homes. Nick and Brad set that up, and that evening when I got back, as a testament to the homeowners, we were blocking the road with it. We had hoses that were in the way. Those homeowners, once their homes were safe, took that equipment, broke it down, and put it back the way that it was supposed to be so that it could be moved.
Great story. All right, thank you, Matt. No further questions on these two properties. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Municipal order number 2025-203.
Municipal order approving and authorizing out-of-town travel expenses for Mayor Todd Alcott to attend the Kentucky League of Cities Economic Development Accelerator in Hopkinsville, Kentucky.
So moved.
Second.
Moved by Commissioner Perigin, second by Bailey. I'll speak for this. Myself, Carlos is the next one on the agenda, spent some time in Hopkinsville, and we got to learn from a professor from Murray, and we were there with colleagues from all over the state of Kentucky, and it was enlightening. We were run through some scenarios on how to make an economic development for our community and to be part of that. And what I will say is that people were in awe that we were there because we're leading it. But there's always something to learn, and there's always something new, and it was great to have Katie there as well. Carlos, you want to say anything on that?
It was fun too. It was one of those things to learn, because I know that both of us, when we came on here, we took that, was it the online class?
Yes.
But to learn it, and also to learn it with you, Katie, and it was fun doing it because we got to see like just different cities and different mindsets of how they would do things. I was on the team with the mayor from Paducah, and he was talking to us just about like how they just got nuclear
Well, a nuclear energy facility.
yeah. But I saw how their team did things and how other teams did things, and I think it helped us learn from other people to make us more proficient, because sometimes our way is not always the right way, and sometimes it's always being able to learn and just to move forward, because that's the only way that we can move forward. But it was also fun just doing it, because the mayor and Katie was on one team and I was on another team, and we did not get picked. So, but we thought we were going to get two of them.
It was a scenario, and we all learned, so.
Yeah.
All right, further questions, comments? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Municipal order number 2025-204.
Municipal order approving and authorizing out-of-town travel expenses for Commissioner Carlos Bailey to attend the Kentucky League of Cities Economic Development Accelerator in Hopkinsville, Kentucky.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Hill. Again, this is the same we discussed. Any further discussion? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Ordinance number BG 2025-14, second reading, binding.
Ordinance granting franchise related to telecommunications system. Ordinance granting a non-exclusive telecommunications or related non-cable franchise to Loomis Fiber of Kentucky LLC for the use of rights-of-way for the operation and maintenance of a telecommunications or related non-cable system within the city of Bowling Green, Kentucky, and further authorizing the execution of a franchise agreement.
So moved.
Second.
Moved by Commissioner Hill, second by Commissioner Bailey. This is our second reading, was 5-0 at our last. Any further discussion? None. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Ordinance number BG 2025-15, second reading, binding.
Ordinance amending Code of Ordinances. Ordinance amending Chapter 11, Finance, Taxation, and Economic Development of the City of Bowling Green Code of Ordinances.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Hill. Again, this second reading was 5-0. Any further discussion? None. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Ordinance number BG 2025-16, second reading binding.
Ordinance amending Code of Ordinances. Ordinance amending Chapters 2 Administration, 15 Business and General Regulations, 22 Traffic and Motor Vehicles, and 25 Code of Ethics of the City of Bowling Green Code of Ordinances to make administrative revisions.
Moved.
Moved by Commissioner Beasley Brown, second by Commissioner Hill. 5-0 at our last meeting. Any further discussion? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Ordinance number BG 2025-17, second reading binding.
Ordinance relating to classification pay schedule. Ordinance amending the classification pay schedule D for Department Head Management of the City of Bowling Green for fiscal year 2026.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Hill. 5-0 at our last meeting. In favor? Any further discussion? None. Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott.
Yes. Ordinance number BG 2025-18, first reading, non-binding.
Ordinance relating to property tax rates. Ordinance setting 2025 property tax rates, franchise tax rates, and improvement assessment rates, and setting forth guidelines for payment, penalty, and interest.
So moved.
Second.
Moved by Commissioner Perigin, second by Commissioner Beasley Brown. Mr. Mizel.
I think you've heard everything we need to relay to you through the public hearing. Katie and I, Sean and Zane are here. Aaron can answer any questions that we may have missed earlier, but we believe the 20.4 cents per hundred to stay where we are is a good spot, but we'll leave it there. It's in your hands.
Mr. Mayor, if I will, first I'd like to thank them, and I appreciate your opinion and thoughts on this, but I'd like to amend this ordinance and make our property tax rate 20.3 cents.
I would second that.
Hey, there's a motion on the floor to amend the assessed property value at .203, and there's a second on the floor. I'll open it up for discussion.
I'm so grateful that you all made that suggestion to amend it on the floor. I had reached out to the city manager and Melinda and the mayor, and yesterday, just thinking through all of the comments that we had been getting, the questions, because, you know, it does when, you know, your property taxes go up, especially for, you know, folks on a fixed income, and it's important for them to be able to stay in the home that they have lived in, is to keep their budget. And so I had asked city manager Jeff Meisel if we could lower it to a way that would help ease that hurt and that harm on our citizens, but in a way that we could still be good stewards, making sure that we're still able to make our FY26 budget. And he assured me that if we lowered it down to that 20.3, that we would be able to, you know, bring in the same revenue that we had budgeted for FY26. So I'm grateful to have all the support of everyone here to make sure that we can do what we can to help ease that, you know, hurt on our citizens, but also make sure we're being wise with our decisions and making sure we can keep make our FY26 budget.
And like Commissioner Beasley Brown, last week I actually reached out to Ms. Charlotte Ward and also the city manager to see if there's anything that could be done to kind of help out and talk to them a little bit. So the best thing for the citizens is always the thing that's going to drive us. Even though we didn't set the assessment and we didn't do that, we want to make sure that our city and the people there are not hurt. I do believe that this is a good move to by basically make it a .23 instead of just keeping it at the .24. We're trying to help out to compensate what has happened with the property assessments going up. But we need to make it very, very clear. The city commission did not do those assessments at all. And we actually lowered it last year, our property tax rate, and we're lowering it again. And I do believe it's the right move to kind of help people out. So I'm glad that this was done again today. And I do believe this is not going to necessarily hurt us by lowering it to this amount.
I agree with you, Carlos, and that's why I wanted to second that motion in support of whatever we can do to ease any burden on any citizen, including myself and everybody else that lives in the city, but also mindful of the needs of the city and not going backwards as Mr. Meisel described. When you don't grow, then you're you're dying. And so we don't want to have that issue either. But it is important that we, try to give back. My concern with all of this is the 63% of the properties that have been assessed. I guess I'm a broken record there, because moving forward, I don't see how I don't think we're going to get another 60% next year, or it could be the same houses, which then creates a bigger burden on the homeowners having constant increases in their property taxes. I feel like that's a huge burden. And so, I hate to be here next year looking at having to reduce our real property tax rates in order to kind of help our homeowners be able to keep their homes. So I just have a concern there, and I'm hoping that we can get some answers at some point.
Mr. Mayor, if I may, Ms. Schaller, you said you've never had to go through the appeal process. I'm going to let the public know what I went through this year. I am blessed that I have my grandparents' house, and my mom lived there before she passed. It was increased the highest amount possible. It devastated me, and the home I live in was assessed as well. My argument was and will always be, let the people that purchase that home decide what that value is worth. Don't penalize me because I have a family home that's been in my family for multiple years. And that's what I believe happened. Did not get to go on with the appeal, but it was, I feel the citizens' pain, assessed the highest percentage it could be, and it is very aggravating. So my heart goes out to the people.
Can I ask you, what was the process?
Yes, you had to submit why you didn't believe. It's original home. It has the original bathrooms, the original kitchen. I submitted a quote to have those brought up to date, if you will. I was told to go find all of the homes that sold in that neighborhood, find the lowest amount that was purchased, subtract my estimate for those repairs, and they were pretty sure it would come higher than what they were assessing it for, and that's what they would assess me at instead of the original amount.
So they're going to raise you even higher?
Yes. So I'm not going to argue the house is worth more, but don't penalize me because my grandparents built it, and it's been in the family for generations, and it needs work. But it is in a nice neighborhood, but it was very aggravating, and for all the citizens that went through that, I'm so sorry. I feel your pain.
I believe the max is 25% on the increase, right?
It was higher. It's 30, close to, mine was over 30. It's 30-something. It was close to 30, mine. Not arguing you, but yes, because I'd calculated
thought-
and,
Yeah.
yeah.
On full disclosure, mine also went up. So my recommendation was not based on
Right.
my issue personally or anyone else's. It was just truly based on the city's budget.
23%.
60% of our community's property went up all at one time. And I've been back to Bowling Green 9 years since returning, and my property's gone up twice. I have a property sitting next to me that's sitting vacant for 3 months because it's on sale. There are, elderly that have not brought up their property to what I'll say par and renovations that people want. We've had 2 houses added to our neighborhood on empty lots that is been around for over 30 years, and they're bringing up the values, but the people sitting next to them don't have the equity in it, what it costs to build new. And so, as we learned during the tornadoes, what people had their houses insured at was not at the value for replacement. And so I do agree with my colleagues up here that the market determines ultimately what the sale and the price of that house is. And our turnover, in this community is 7 to 8 or a higher percent. I don't know, but normal communities around that percentage, just at a normal turnover. This was hard to stomach. We have to find the balance between meeting budget and setting the rate that can compensate our city at our growth rate. We're doing that The proposed budget is 15.6. The budget is 15.5. That means we're 0.1 over. I believe this increment can get us within the budget and not hurt us, and also be able to take care of the city and our growth. So we don't want to hurt the recommendation that you're giving us, but we all, I think we understand up here, we're already hurting as a whole. We're paying more, and we're all paying more. 60% are going to pay more this year.
Please understand that the finance department uses the first recap report from the PVA that's released in April. They go through that thing like a fine-tooth comb, looking at city proper, city annex areas, what the growth is, and we rely on that to set our budget. And that's what we did again this year, and then we kind of got burned when that
$200 million
$200 million,
increase.
when that increased that much with the second and final recap when it came in August.
Very hard to plan like that, and I realize that we are not responsible, we as a governing body are not responsible for the values that are assessed. That's the PVA, Property Value Administrator. But I feel like we're missing a good educational opportunity here to maybe let the citizens know how that exactly works. Do they come to your home? How do we manage with a small operation to get 60% of the properties assessed in one year? And that's a lot of properties. And so what is the process for that? And then maybe making it more clear how somebody could appeal without having to do you shouldn't have to go out and find similar property values and get estimates on what it costs to bring a bathroom up to, that just seems like a lot of burden on a homeowner. So I'm not sure how that looks or what we could do, and maybe we could have a working session with our PVA that we could ask questions and let them help our citizens to understand this process, because it's us they call. We're the face. And I don't really have a lot of answers to provide them. So just an idea, just throwing that out there. How do you all feel about?
Well, I mean, it would be helpful, I think, for folks to know who can they hold accountable for, these assessments going up. And my understanding is that it's not a city function. It's the PVA is its own elected office. So, so if they do have questions about what the appeal process and what the options are, I think we need to make sure we can maybe provide folks his contact information. So maybe the phone number for that office and their email, so they know how to go directly to the source. And then, Katie, were you saying that it was our state legislatures who sets the regulations around PVA, so then they could also maybe reach out to their state legislature if we feel like maybe this process needs to be, clearer for folks?
All of the process that the PVA follows is within state statute. So everything is laid out within state statute for the PVA to operate, and then also for us, obviously, when the local government is going to set the state or set the tax rate. Again, all of that process is laid out in state statute. So it would be the state legislature to talk to about making changes to that.
So we don't have the authority to change what the PVA is doing, but the state legislature could potentially have a voice, and then the PVA, if folks reach out to him, they're the ones making the...
There is a Kentucky office for the Property Valuation Administrator, so that would be the main umbrella over all of the 120 counties that have a PVA office.
And that falls in the Department of Revenue.
Yes.
Is it possible for us to put a link to the PVA's website for answers that our citizens might have on our webpage to direct them over to the PVA when they have questions or concerns or want to know processes and things like that?
I think it may be already in the finance section of our website, possibly. It used to be.
Not sure if the link is there currently.
Maybe make it on the home page where it's a little more accessible.
Property tax.
Yeah.
Yeah, most
Give
of the
the phone
property
number.
tax law is in KRS.
Website and phone
Chapter
number.
132, I believe, right, Hillary?
But then as we're getting questions and concerns, which we all do, we could direct them to maybe our homepage that'll take them over to the PVA's contact information where we can, say, hey, it's right here. I appreciate that. Thank you.
All right, I'm going to move this discussion to, we have an amendment on the floor. That amendment is to change the compensating rate from 20.04 to 20.03 for ordinance number BG 2025-18. No further discussion. Can we have a roll call, please?
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. And as amended, for first reading, non-binding ordinance number BG 2025-18. Any further discussion? Roll call, please.
Bailey?
Yes.
Beasley Brown?
Yes.
Hill?
Yes.
Perigin?
Yes.
Alcott?
Yes. Okay. Well, we're checking for public comments. Our next scheduled meeting is September 2nd, 2025, 4:30, right here at the Bowling Green Commission.
And thank you so much, Tim Allen, for all you do for our community. It's been a real pleasure working with you for all these years. You're wonderful, and I'm sure that we're going to find an appropriate spot for
All right.
your precious son.
There are no further comments at this time. We are adjourned. Thank you, everybody.